What's up guys, Mo here, welcome back to another lesson. So today, once again, we're going to be taking a look at the order flow footprint. I'm going to be showing you guys today a setup that I was able to catch on USD CAD using the order flow footprint, a bit of Wyckoff and smart money. So today what we're doing is we're merging the three concepts together, okay? And this is the way of FU Academy. These are three main concepts that we teach all our students, okay, in order to be able to get the best out of each one and be able to form a very solid strategy for yourself. Okay, so as a start, guys, you already know that we use Wyckoff for direction in the market. Okay, we use Wyckoff for direction in the market to see when the selling is about to stop and the buying is about to occur, basically accumulation, and when the selling is and when the buying is about to stop and when the selling is about to start, which is basically distribution. Then we use our smart money concepts such as our institutional candles, our imbalances, all these sorts of points of interest, and we're also using our market structure, okay, and break structure, etc. And then we use finally order flow as a confirmation. Now, with order flow, when it comes to order flow, there's two things. You can use order flow as standalone. Okay, so basically you're basing your setups mostly off order flow. Okay, your reliance is 100%, 80%, 90% on order flow, or you can use order flow, or you can have very low reliance, but it's still a confirmation. Okay, so obviously, as I said before in the last order flow video that I made, there's many different confirmations and there's many different setups that you can use with order flow. Today I'm going to show you a different setup compared to the setup that I taught you guys last week, I believe, regarding the buyer and seller traps. Okay, today I'm going to talk about more about single prints and how you can get in on setups using that. Okay, so one of the first things when it came to USD CAD, this was a setup that I was looking at. One of the first things when it came to USD CAD was price was obviously moving very strong. Okay, downward, a lot of selling volume, a lot of aggressive selling, and then slowly, okay, the price ranges are getting smaller, the volume is decreasing as we reach the bottom right here, as we reach this level right here, okay, and price slowly starting to enter lateral phase right here. Okay, so slowly we're entering a consolidation phase. Okay, first thing straight away, this is one of the first things that you want to look for is a potential accumulation phase. Okay, basically this is the end of our selling right here. Okay, end of our selling pressure right here, and there could be potential taking profits of this trading range or buyer interest start to show up here. Okay, this is very identifiable right here by this move right here. Okay, so you can consider this our automatic rally if you're looking at accumulation. Okay, boom, a lot of buying pressure right here, showing us that there is some selling, that there is some buying coming in here after our support right here. So our preliminary support, okay, first sign of buying. Okay, then we got our selling climax, boom, one last push down, the manipulation right here, boom, clear this double bottom here, manipulation, and then a big push up right here, trend. So basically we got the CMT right here. Okay, now I'm not really going to focus much on the Wyckoff aspect of it. Okay, basically the main thing that you want to look for right here, okay, the main understanding, the function that's happening right here is selling has stopped, we're entering an accumulation, price is just simply consolidating, we're ready for a push up. Now when we look closer at this price action right here, okay, one of the first things that I would like to take a look at is obviously this price action right here. So if I get rid of my box, okay, so realistically, quickly, I'm not really going to actually go over everything right here that we have, but what you guys can see is obviously an institutional candle. Okay, an institutional candle, so either you can take your buy off the open or the wick or the 50%. Okay, here you can see basically came down like 50% of that wick. I would have executed this anyways. Sometimes the wick is not gonna come exactly into your candle. Okay, so drop down here, boom, touches our 1 hour IC, and away it goes. Now it's reacting a tiny bit. Okay, and then we get another pullback, and then we get another push up. And this is my break structure on the 1 hour time frame. Okay, so the main thing that you want to look for right here is the break structure that you got on the 1 hour time frame right here. Okay, and you want to look at this strength that we had right here. Okay, so instantly we had a lot of buying pressure. Once again we touched that IC, it reacted, boom, and then once again we touched this IC and we had a lot of buying pressure. So clearly price is inclined to start pushing up because it tested down here and it failed to push this level below this level, and it found rejection off this area and it rejected, came down here, rejected once again. So now we're inclined to start buying. Okay, we can see that there's more buyers in control here than sellers. Okay, so now what do? I go on to my order flow footprint. Now there was two setups that you could have gone into. Okay, there was two different types of setups. You could have gone in on the setup right here down at the bottom, or you could have gone in, waited for that break of structure and waited for that bullish movement, for those bulls to take over, and then you could have gotten into setup right here from this area. Okay, so let me get rid of this really quickly, guys. It keeps buzzing. So there we go. Okay, so you could have gone in here. So let me pull up my order flow chart right now. Perfect. Okay, so what we're looking at right here is the 6C future. Okay, so this is the Canadian dollar future, and remember guys, if this is going down, then USD CAD is going to go up. Okay, correlation inverse. Okay, so it's inversely correlated right here with the 6C future. So now what do we have right here? Really quickly, if this is confusing for you, I'm going to show you guys where we're at. So this is the first touch that we had right here. I'm going to bring the chart up as well, and I'm going to try and put that to the side. Sorry guys. Okay, so I'm going to try and put that to the side so you guys can see a bit better. Sorry for the delay, just want to make sure that everything's clear for you guys. Okay, so what can we see here? We can see obviously that this move down was this move up here. Okay, this move down was this move up here. So once again, it's inversely correlated. So now what are we looking at? Now, one of the first things that I always try to look for, okay, the main two things when I'm looking at an order flow footprint is I'm waiting for a buyer or seller trap to occur, or I'm waiting for a single print to occur. Okay, I've already told you the meanings of that before, guys. Okay, basically, especially the buyer seller trap is very, very optimum when we are close to a high or a low. So for example, if I draw a thing right here, okay, so let's say we have a high up here, we have a pullback, and the buyer is obviously starting to come in. Okay, when there is buying pressure right up here, okay, and we're starting to reach this high, what are the buyers expecting? Their buyers are expecting another high to form, okay, a new higher high to form, a break up above this previous high right here. Okay, so now they're starting to buy very, very aggressively. Okay, so boom, you get an aggressive push, and this is what happens. Your seller, your buyer's trap will occur right here. All the buyers will get trapped. Okay, and then the market will turn, and once they realize that they got trapped right here, what are they going to do? They're going to close out this position and they're going to aggressively sell, so causing even further movement down here. Okay, so just think about it once again from retail perspective. What are they going to do? They reach up above, close up near to this high. Okay, they realize that obviously they're waiting for a new higher high to form. They realize that they've been purged right here. Boom, market is dropping. Okay, the manipulation has occurred right here. What do? They close out their position now and they're entering aggressive sells. The difference between an aggressive and a passive sell is an aggressive sell is entering straight into the ask. Okay, yeah, entering straight into the bid. Okay, so what are you doing? You are selling straight away. It's a market execution. Okay, you're not waiting for a price to come to you. You're getting in at that market level. When it comes to a passive, buying or passive selling, you are waiting for a price to come to your level. So you are a passive buyer or a passive seller. So basically a pending order limit, a sell limit or a buy limit. Okay. So aggressive selling right here, and boom, the price dropping. So what am I looking for right here? So this is my first movement right here, and this is this move right here for me personally wasn't the most high probable. I mean, we did get a lot of buying pressure right up here. Okay, so we had a lot of bulls, we had a lot of buying imbalances right here. Okay, obviously we had mini consolidation. Okay, so if we take a look from this perspective, so here we have it. So we had consolidation. Okay, price consolidating, creating lows, and then boom, you get that push down, you get that buyer's trap. Okay, so we had the buyers being trapped right here, thinking that, oh, okay, price is now going to break below this low and create a new lower low for us. So now they're selling, now they're selling right here, from a 6C perspective, they're buying right here, okay? Breaks above here, basically breaking below this low. Buyer traps right here, okay? And you can see most of the buying, okay? So the COT, the cumulative traders, right here was up right here. So basically this was most of the volume in the candle at that time. So in the 30-minute candle, most of the volume, the buying and selling was occurring right here in this black rectangle that you see right here. Black, blue candle, blue imbalance, blue imbalance, blue imbalance, and then price is reversed. Okay, so price reverses right here. For me, I would have preferred if we actually had like a fine print maybe at the top, like a single print at the top, or we had the buying imbalance more at the top. Okay, this still counts, but it would be better when it's at the top of the tick right up here. Okay, either way, I didn't take the setup right here. For me, it wouldn't have, I mean, from a smart money perspective, this would have been very, very probable. Okay, everything was perfect about it. Even the, if you took like your fib, for example, from low to high, okay, this is a perfect setup, because what are you waiting for? You're waiting for that retracement back down. Your institutional candle is the red line. Boom. Price touches that 71.6 level. Okay, and it reacts. From an order flow perspective right here, your reliance on order flow wouldn't have been that great. Your reliance on the smart money concepts right here. Okay, your reliance on your market structure, your reliance on your institutional candle would have been higher. Okay. Reliance on here would have been like 20%, something like that. Okay. So this is what I mean when I say reliance. Okay. What concept are you using more of in this certain situation? Obviously we did have some sort of buyer trap right here, okay, but that was about it. Okay, we didn't have much order flow confirmation in this level. Straight away price started dropping down, not much selling imbalances. The selling imbalance started occurring right around here. Okay, so now I'm going to show you the setup that occurred right here. So obviously market retraced, obviously made a big up move right here. From a 6-hour perspective, it closed very bullish. Okay, so we had a bullish engulfing candle, and this was my nice 6-hour SC1 setup. So we have our 6-hour SC1 setup right here. We have last down candle before the up move, bullish engulfing. What do we wait for from an SC perspective? We are waiting for the next candle to wick in to the previous candle to it like this, and this is what we're waiting for. So that retracement right here, this wick right here, was a retracement that we see right here. Okay, so this retracement was that wick. Okay, so now I have my 6-hour marked up, and now I'm waiting to look for a buy right here. So I'm waiting to look for a buy right here. What occurs? Okay, so we have a 15-minute continuation candle, etc, etc. I mean, it worked, but my reliance on the smart money concepts would not be that much, because I don't really have an entry right here. Okay, I don't really have a perfect IC or anything like that. Yeah, we have confirmation market structure. Okay, so we have more confirmation now to enter here due to market structure. Prices are traced down to this support level. Okay, so once it broke above this resistance, it became support. Okay, so broke this resistance, became support. But I'm trying to now look for more reliance on order flow rather than more reliance on my institutional candles or imbalances, etc. So here we're relying more on order flow. So what am I waiting for right here? This setup now is where you're looking to get in on single prints. Okay, so you're waiting for a single print to occur. Okay, so single print occurs right at the top right here. Okay, a lot of selling pressure. We can see that we have a lot of selling imbalances, and most of these candles, our COT is at the bottom. So basically most of the volume is down here. So these are very strong aggressive selling occurring right here. Then we have here, we come in here and we create a single print. Perfect. So now when we're looking at entering from a single print, okay, we're looking to enter basically 2 ticks. Okay, we're allowing price to come up between 2 ticks from the single print, and we can sell down. Okay, so we're not looking for any institutional candlestick right here. We're actually entering straight from the order flow, from an order flow perspective. So when I go back up to here and I find my rectangle, okay, so from our, sorry guys, this software sometimes is very hard to maneuver. Okay, so from our single print occur, what do we count? We will count 1 to 2 ticks. Okay, so 1, 2, boom. What does price do? Consolidates around here, retraces all the way back down. Okay, mind this is this candle right here. We have obviously the previous resistance. Okay, so price react off this previous resistance. Okay, that's newly found support now. It reacts right here off this setup. So this setup right here, the single print setup. Okay, so basically the idea is here that once price came up here, the last buyer was in here, so there was literally one contract traded right up here. Okay, one contract traded and price rejected. So the idea behind it is if price comes up here again, we're going to find another rejection. Okay, because price failed to follow through up here. Okay, this was the last selling that occurred here. So if we come up here once again, we expect for price to reject right off the single print again and continue the selling downwards. Okay, so that's kind of the idea behind it. Now, this isn't my most high probable setup when it comes to order flow, but this is if you have a lot of other confirmation. Okay, when you have a lot of other price action confirmation, but you can't find an entry from a smart money perspective, you use the order flow. So this is what I mean once again when you're mixing and matching these different concepts and these different strategies to find optimum trading setups. Okay, you're not going to take every single type of setup that you find. Okay, mixing and matching, you're going to come up with a lot of different basic subsidiary strategies here. Okay, so maybe you don't like these type of setups, maybe you prefer some other setups that I show you. So it's all up to you at the end of the day. So once again, price retrace down here, boom, between 2 ticks and away it goes. Now if you take a look at it from a section perspective, this in fact was a reaction right off our open right here of our institutional candle. So our continuation candle, and once again, what do we have? Seller imbalance, selling imbalance, selling imbalance, and away it goes. So this is a beautiful, beautiful sell. Once again, a lot of selling imbalances, okay, and a lot of single prints at the top as we go along, okay, showing us just aggressive selling in the market occurring. So this right here would have been a beautiful, beautiful setup to take. Now, when it comes to stop loss placement, because we had it actually a continuation candle right here, I would have placed my stop loss right below here. Okay, with this type of setup that I'm showing you guys today, it's crazy how tight the you can have the stop losses. Okay, so the stop loss can be very, very tight. If we didn't have an institution candle right here, what do? We literally place the stop loss 1 tick above the single print. Okay, so right here, I would have placed my stop loss right up here. So 1 tick above my single print. So my stop loss would have been here. This allows for extremely, extremely high risk to reward setups. Now, contrary as well, we will get a lot of failing setups with this, but at the end of the day, like, the stop loss is extremely, extremely small, like 2 to 3 ticks. Okay, so you will need an account with like 0 spreads to kind of trade this type of setup. Okay, so the risk to reward on here would have been crazy, unbelievable risk to reward right here. Boom. 2 tick setup. Okay, so 2 tick stop loss. And now when it comes to take profit, I probably wouldn't have taken this whole move. Okay, I would have aimed for this 1 hour IC right here. Okay, so we have the 1 hour IC. This would have been my take profit. Okay, we also had liquidity, trendline liquidity right here that we would have wanted to target. Okay, so all in all, this is a very, very nice setup if you break it down. So your risk to reward right here would have been a nice 17 to 1 risk to reward right here. Okay, so beautiful, beautiful setup. Now, that's pretty much it, guys. I'm going to leave you guys here. Hopefully you guys gained some value. Once again, guys, if you are interested in learning more about order flow and learning more about the smart money concepts, in getting access to our order flow signals, which are extremely, extremely high probable these days, we're hitting take profits left and right. Okay, so if you guys are interested in that, make sure to head on to fuacademy.com and register to one of the packages available there. Thank you guys so much for watching, and I'll see you guys in the next video. Have a good day. Bye bye.